All customers who had deposits in these banks can rest assured, rest assured they'll be protected and they'll have access to their money as of today.
How's everybody doing? My name is Anthony Brian Logan, and today we got to talk about the Biden administration announcing what is essentially the bailout of two banks, Silicon Valley Bank and Signature Bank. Now, the reason why I say essentially sounds like kind of sort of is because it's not quite what they did back in 2008 with the bailouts, but in essence, it is. I'll explain. What they did in '08 was just print and spend $700 billion. Billion with a B, not million, but billion. This was to save all the big banks from collapsing. JP Morgan Chase, Wells Fargo, Bank of America, etc. They print and spend a bunch of money to save the banks, so now they're still alive. What they're doing right now is changing the FDIC rule. So every bank account in America is insured by the Federal Deposits Insurance Corporation of up to $250,000. Anything beyond $250,000 will not be insured. So let's say, for example, your bank fails and you have $1 million in the bank. You're not going to get most of that. You're going to get $250,000 maybe, but anything beyond that, you've lost it. Since there was so much money in Silicon Valley Bank, billions of dollars, and 94% of the deposits were not insured by the FDIC, they were beyond the $250,000. The government came in and just removed the rule from the FDIC. So rather than the limit being $250,000, there is no limit. All the money that was deposited is guaranteed by the federal government, all of it. So the big corporations, small companies, if you're a normie with a bunch of money in there for some reason, you will be made whole by the federal government. And guess what? Here's a kicker. The government says that it will not affect the taxpayer. How? How can the government guarantee billions upon billions and not have it affect the taxpayer? Oh, it's going to come from the FDIC fees we already get paid from the banks, huh? Is that right? If every bank failed, would there be enough money in that fund to take care of all Americans, all depositors? I think not. And before I go any further, there's a video of Biden talking about this. If you want to see this video in full without my commentary, link as always will be in the description. If you're on IG, visit the link in the bio and go to the corresponding article on the website. But without further ado, let's go ahead and roll it.
System overall. I want to briefly speak about what's happening in Silicon Valley Bank and Signature Bank. Today, thanks to the quick action of my administration over the past few days, Americans can have confidence that the banking system is safe. Your deposits will be there when you need them. Small businesses across the country, the deposit accounts at these banks can breathe easier knowing they'll be able to pay their workers and pay their bills.
Now, let's pause right there. This is a real concern because here's what's happening. If you cannot access your money, let's say you're a small mom and pop shop, you can't access your money. Come payday, you can't pay your employees because you're writing checks from that account. The checks can't clear. There's no money in the bank. So that's a real concern. However, changing this rule is going to change banking forever.
And their hardworking employees can breathe easier as well. Last week, when we learned of the problems of the banks and the impact they could have on jobs of small businesses and banking system overall, I instructed my team to act quickly to protect these interests. They've done that. They've done that. On Friday, the government regulator in charge, the FDIC, took control of Silicon Valley Bank's assets. And over the weekend, it took control of Signature Bank's assets. Treasury Secretary Yellen and a team of banking regulators have taken action, immediate action. And here are the highlights. First, all customers who had deposits in these banks can rest assured, rest assured they'll be protected and they'll have access to their money as of today. That includes small businesses across the country that bank there and need to make payroll, pay their bills, and stay open for business.
So, I mean, he's trying to downplay it a little bit, but he's at the same time halfway being honest. the majority of the deposits in Silicon Valley Bank are from businesses, not from regular everyday normies just putting the money in there. Okay, you're not really going to be Joe Everyman going into SVB, opening a checking account and putting $2,000 in there. That's not really happening.
No losses will be, and this is an important point, no losses will be borne by the taxpayers. Let me repeat that. No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the deposit insurance fund.
See, now I got to pause right there. So again, if the limit was $250,000 from the FDIC insurance and the banks already paid into that and you've removed the limit, what's going to happen is you're going to have to raise the fees to be able to cover events like these, or to at least try. Because like I said, if every bank failed like this, if every bank had to rely upon the FDIC, there wouldn't be enough money in it. This is a Ponzi scheme. This is the same thing that some banks do when they're mismanaged, just like SVB was. When you raise the FDIC fees, all that's going to happen is you're going to raise the rates upon banks lend out money. So you're going to have higher auto loans, mortgages, regular personal loans, business loans, everything. You're going to have all these bank products go up in price, which is going to be an indirect tax to the consumer, to the taxpayer. Okay. You're saying you're not going to just write a check from the federales of $1 trillion, but you're doing that in a different kind of way. But I digress.
Because of the actions that our regulators have already taken, every American should feel confident that their deposits will be there if and when they need them. Second, the management of these banks will be fired. If the bank is taken over by FDIC, the people running the bank should not work there anymore. Third, investors in the banks will not be protected. They knowingly took a risk, and when the risk didn't pay off, investors lose their money. That's how capitalism works.
Now, of course, that should be what happens. You shouldn't be getting rewarded for doing stuff like this or for investing into a failed venture. But that was the same thing that happened in 2008, if I'm not mistaken. If you were an investor into a bank, you weren't protected. And I think credit unions are not going to be involved in that because, as far as I know, and if I'm wrong, let me know in the comments, credit unions are not public. They're owned by the depositors. But a bank like Silicon Valley Bank, for example, is publicly traded. So you have investors that, and probably a board and everything else. But let's keep on going.
And fourth, there are important questions of how these banks got into the circumstance in the first place. We must get the full accounting of what happened and why those responsible can be held accountable. In my administration, no one is above the law.
So there's more there. I don't want to play the entire thing. Like I said, it'll be in the description. If you're on IG, link in the bio, visit the article on the website. But yeah, so the Biden administration says, hey, it doesn't really matter how much money you have in your account. You could have $500 in your account, which is SVB, I doubt it. Signature Bank, same thing. You can have $500 in your account, or you can have 2.2 million. It's fine. We're going to insure every dollar amount. So they've changed the FDIC rule. As I said earlier, this is going to change the way banking is done in America from here on out. There's going to be more risky moves made by banks to maximize profits. Why not? Because regardless of what I do, I can gamble all the money away in the bank that the depositors put in, because if I fail, hey, man, we're going to have the government come in and insure all the money. I have no worries about that. I have that to fall back on. It's like if you're hooked on drugs and you know that there's always going to be somebody there to rescue you in a time of need, you're not going to hit rock bottom. You keep on doing drugs. You keep on just going above and above and keep on indulging because you know there's a fail-safe there. That's what happened here with the FDIC and the rule change. And it's pretty simple, and it's not going, it'll help us right now in a short term, of course, because if you want to get paid from your job, you want to get paid from your job. You're doing work, you're working 40 hours a week or fingers to the bone, and you go to your job on Friday, Monday, whenever it is, looking for your paycheck. And if it's there, you're happy. But what about years from now when we're going to see the effects of a policy change like this? It's not going to be all sunshines and rainbows, but I think I'll leave that right there for now. And what say you? How do you feel about what's going on here with the Biden administration basically, essentially bailing out SVB and Signature Bank? Whatever your thoughts are, Let me know in the comments below. You guys pretty much know where I'm at. This is no surprise to me. This was going to happen because of the interest rates and the printing and spending, the inflation going on. It's not just you go to the store and things cost more. It's going to affect the entire economy. It's going to affect banks. It's going to affect businesses. It's going to affect the entire world. And I think we're just now seeing how bad the inflation and money printing actually is in terms of effects. But whatever your thoughts are, please let me know in the comments below. And that's all I got to say for this video. If you like what you heard, please comment, rate, share, and subscribe. Peace.